Most traders think to be a top 1% earner, you need to chase the perfect setup, the perfect strategy, and you need to have a high win rate. And unfortunately, those are not the right metrics you need to be chasing. And now for someone that's over 11 years in, I am proof in the pudding. I call every single trade live, as every single one of you know, those that are regular viewers of the channel. And it's all well and good me be able to prove this and do this system. But what about people like Jack, people about Louis, who've also done the same and changed their lives in 2025 and made them top 1% earners in their countries. Today's video will be a blueprint, a walkthrough as to the things you actually need to focus on, the things and the systems that you need to set up yourself and understand so that you in 2026 can become a top 1% earner from trading. And unfortunately, trading success, trading longevity, it's taught really, really poorly online. A lot of people in the teaching space, educational space, have been only trading 4, 5, 6, 7 years, and they've not endured, all market cycles. Market's obviously very cyclical, as we all know. And unfortunately, a lot of systems that people trade may yield decent results over 3 months, 4 months, 6 months, a year. But what does P&L, what does percentage gain look like over 5 years, 10 years and beyond? Because win rate is not what we should be chasing. It is positive expectancy. And today's video, we're going to go through the whole system of how and what you need to do to make yourself a top 1% earner. So one of the first things you absolutely have to understand is that markets are not driven by technicals, okay? And this is, I'm sick of seeing this, where people think their technical analysis on the 5 minute, 1 minute, 15 minute, that's why price is doing what it's doing. It's nonsense. Markets are driven by macros, they're driven by fundamentals overall, okay? So if you are ignoring that as part of your system, you're always doomed to fail. It might yield some short-term results because of a lucky patch, but again, we don't care about short-term results. We care about a system that consistently pays you. So the way you need to initially set yourself up and your overlook of the markets is what is going on from a macro perspective, fundamental perspective, geopolitical perspective, obviously if you're trading things like commodities as well. And then from there, you need to then, when it comes to technical analysis, because technical analysis is super important, I'm not crapping on it, but it has a time and a place. From a technical perspective, that's then when you need to get the monthly, the weekly, the daily, the 4 hour, and in particularly the weekly, the daily, and the 4 hour. That's what you then need to make sure is aligned and is in sync with what is going on from a macro, a fundamental perspective. So then you can get that weekly, daily, 4 hour aligned. Let's say DXY is very bullish because of, again, certain data. We then need to make sure weekly, daily, and 4 hour are bullish as well. And we are simply, honestly, looking to trade with the trend. And we're looking, if we're bullish, to simply buy from proper higher lows on higher time frames, so we get a great risk to reward and it's safe, okay? And it's very then hands off, we let price do its thing and we take our profits along the way. So now that we have our trading approach nailed, we need to make sure then we have risk management nailed. And this is my risk management profile. This is what I've done for years and years and years, and it has served me tremendously well. And this opinion I'm about to give you, without sounding like an asshole, it's more fact than it is opinion, because this is backed by data, it is backed by the math, it's not backed on because I think so, or because I've had a couple of years worth of data. No, it's backed on the math. And positive expectancy is what we need to be chasing, okay? Not win rate. Everybody gets led down a wrong garden path, that emotive garden path, where people think win rate is what's going to make them consistently profitable. And it doesn't, because you can have a high win rate and still have losing streaks. You can have a low win rate and obviously have losing streaks. What we care about is positive expectancy, okay? So my risk management profiling, and this is what I do to this day. You can ask any one of my mentees as well, okay? And there's a reason October's just finished and it's 22 verified profitable months on the bounce. Yes, I have losing days. Yes, I have losing weeks, but 22 profitable months on the bounce is my longest monthly win streak to date. And there's a reason for this. I'm a fantastic risk manager. I prioritize risk, okay? So how does this system look? Every trade I take is consistently position sized, every single one. I also take a minimum risk to reward of a 1 to 3 per trade. That doesn't mean I'm aiming for 6%, 8%, 10% targets. That's ridiculous. Very rarely does that ever happen. But I'm also not taking any trades that return me less than 3%, okay? So most percentage targets on a trade is 3%, 3.5, 3.4, 3.75. Depends on what I'm targeting. If you want to know more about that, check out my free masterclass series on my channel as well. So the reason I do this is so when I do have my winners, my God, do they win, okay? So again, you hear this example all the time, but it's so true. If I have 10 trades, 7 of them are losers, 3 of them are winners, okay? I've got a 30% win rate based on that set of data. I know it's a tiny bit of data, but a 30% win rate. I'm still 2% up for that week or that month, okay? And that's with 7 losses. And this is where a lot of lower time frame traders argue, well, what about the psychological damage that's going to do to you if you have 7 losses? Psychological damage isn't a thing or shouldn't be a thing. It's not a thing for us professional retail traders because we understand that losses are a very natural part of successful trading. Very. And if you try and avoid them, that's then when you get psychologically ruined. You become very emotive, you become greedy, you become FOMO, you become depressed. Do you know what I mean? So you can't approach markets, and this is key for anybody that wants to see success in 2026. You cannot approach markets with a I need to be right attitude because you will continually fail. I've been there. Trust me, I've been there. And this whole, I'm biased, but again, the math proves this with positive expectancy. You're much better off trying to aim for a 35, 40, 50% win rate with a minimum risk reward of a 1 to 3. That will pay you much healthier over a much longer time period than a 1 to 1 will per se, okay? And remember, if you do go into a losing streak, which every single trader will, doesn't matter what your win rate is, when I go into a bit of a losing streak, let's say that's 4 losses on the bounce, I'm 4% down, I need 1, maybe 2 trades to get me out of that. That's it. A 1-to-1 trader needs 4 winning trades, okay? And those 4 winning trades, there might be losers in those 4 next trades anyway, but they need 4 winning trades. And if that is a 1-to-1, is it really a 1-to-1 by the time you factor in spreads, commissions, fees? I don't think so. So it can do a huge amount of heavy lifting for you when you are winning, but when you are also in those natural drawdown periods. I cannot stress this enough. I've been around the block. I have done 1-to-1s. I've done 1-to-2s. I've done 1-to-3s. And I've never, ever looked back on trading a minimum risk reward of a 1 to 3 with consistent position percentage sizing. I promise you, it helps you in so many ways compared to any other risk to reward, okay? It is realistic as well. A lot of people argue, well, I can't trade a 1 to 3. Then you have a strategy problem. You have a system problem because it is totally plausible, okay? You just need to get off the lower time frames. Again, if you want help with strategy, go to my free masterclass on my YouTube. There's a 3-part series that breaks down everything, okay? Completely free, okay? So you guys can use this information to double down and trust the process and trust the education I give you to eventually get yourself in a position like myself and my other mentees. And last but certainly not least is you need to track like an elite athlete, okay? Like an elite athlete would track every workout, every bit of food they put in their body. You need to adopt that same obsession in your trading with your journal, okay? Your live trading, you need to journal every single nitty-gritty part of it because what you don't track, you can't measure, okay? Journaling can help you refine an edge. It can help you find an edge in general, but it can help you refine it. It can help you tweak it. It can help you eradicate why your losing trades are losing to make sure they're optimal losers and not losers you shouldn't have taken and should have avoided. Journaling, and again, there's a free journal video on this channel. Go through it. It goes through every single pillar I use in my journal to this day. Again, so it's information you can trust and double down on. I want to help you guys because there is such nonsense taught out online. You need to track like an obsessive athlete, okay? Because it tells you so much. Yes, is it a little bit time consuming? Yes. But if you want true success, you want to be a top 1% earner, this is the stuff that we do. And I still do this to this day. Okay, I'm over 11 years in. I still do it. I still back test. And people think that's madness. At over 11 years, I say no. It's because I'm continually refining. As markets change, as macro and fundamental things change, it's making sure that we are on the same side and that we are trading in line with that. So journal everything, because it's your best friend. It can help you also press your advantage on what's going well in your system. You might find actually with a particular time frame in terms of entries, you're a lot better on. It's a lot more trustworthy on. You go into less drawdown typically on your winning trades. It's little details like that that can make a massive difference if you're picking up on all those little details and bring them all together. Journaling tells you so much. It's not just about tracking your P&L. It's not just about tracking maybe win rate. It's not just about tracking those average metrics, okay? It tells you so much more. And if you aren't tracking or you're doing the bare minimum, you're never going to make it. Again, you might have little spells of 2 months, 3 months, 6 months. You maybe passed a few phase 1, phase 2 prop firm accounts, but it will not give you proper long-term payouts. It will not give you proper personal capital and building that in the, in the background as you trade props as well. Please journal, okay? Because again, to be the top 1% in anything, you have to act like the top 1%. Even if you're not where you want to be, you have to act like them and do the same things that they would do. So that is being a great risk manager. That is tracking your data, your journal, your trading, your behavior, your psychology. It's tracking all of that, okay? So you can become a better person on the charts, more disciplined. You don't break promises to yourself. In your personal life, you become more disciplined. You don't break promises to yourself. And you become this absolute top 1% unit of a trader that I think you deep down know you can be. But there's probably quite a few things that you're lacking on, whether you know about it or not, and you need to work on it. You need to get more serious with it. So as always, guys, I hope that helps. And remember, long-term consistency, long-term profitability is about a system, okay? It's not just about technicals, okay? You need a proper system. The things we've covered that you bring all together, that you stay 100% disciplined with, you execute with 100% discipline, you don't break promises to yourself, and you do this system over and over and over again to the point where it feels boring, mundane. That's how trading should be. That's how trading is. Successful professional retail trading, 3 to 5% months, and it is boring, it is mundane, it is very, 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 very repetitive. But that's how it should be. If it's an emotional roller coaster, you're nowhere near where you should be and want to be, trust me. Guys, as always, if you found that video helpful, drop it a like, always leave a comment. I try to reply to as many as I can, and I'll see you guys on the next video. Take care.